Welcome to the year 2017. My name is Tian Yong and I'm an investment analyst with Phillip Futures. Today, I'll be sharing a few of the key themes investors can explore as we head into the new year. Specifically, I'll be touching on three key regions: the United States, Europe, and also Japan. In the United States, Donald Trump is expected to persist as the key person to watch as we head into the new year. His plans for heavy infrastructure spending, generous corporate tax cuts, and deregulation will be closely watched. These plans, if materialized, may translate to higher rates of inflation, which in turn gives the US Federal Reserve more headroom for interest rate hikes in 2017. Also, another area to note will be Trump's treatment of China, which can prove to be a delicate balancing act. One of the beneficiaries of tax cuts and infrastructure spending under Trump will be the Dow Jones Industrial Average, which came as close as just 1 point shy of 20,000 on the 6th of January this year. Watch if the index is finally able to find steady support above 20,000 after last year's failed attempt to do so. Markets may also exhibit some caution and nervousness before Trump's inauguration day on the 20th of January this year. Another expected beneficiary under a Trump-led United States is the US dollar index. The US dollar index is a trade-weighted index attempting to measure the general value of the US dollar against a basket of other currencies. We can see that the euro holds the highest weight in this index, followed by the Japanese yen, the British pound, and so on. The US dollar index has recently broken out of its previous 13-year resistance level of 100 on expectations of a more hawkish US Federal Reserve in 2017. Watch if Donald Trump's policies eventually materialize and lead to higher rates of inflation coupled with more interest rate hikes this year. If pronounced enough, price movements may even move towards 108 by the year's end, riding on the back of continued divergence in monetary policy. On the European front, two key themes are expected to linger this year. First will be the continued uncertainties surrounding Brexit. The other would stem from the leadership renewal process in both France and Germany. In the United Kingdom space, the pound has recently twice tested the key support level of 1.2105. Amid a relentlessly appreciating US dollar and Brexit developments which may prove to be adverse for the UK, it is possible that the sterling dollar pair may soon have to find new support below this level. Since the United Kingdom's EU membership referendum last year in June, it was observed that the pound's movements against the US dollar have been generally inversely correlated with movements in the FTSE 100. Against the backdrop of this inverse relationship with the sterling dollar pair, we may find that a continued weakness in the pound will be what the FTSE 100 needs to sustain its price action above previous all-time highs. On the Europe front, the euro has recently broken down from its previous key support level of 1.08. This is primarily driven by Trump's elections victory, the US Federal Reserve's December interest rate hike, and more recently the European Central Bank's decision to extend its quantitative easing program all the way through the end of 2017. It may be likely that the euro-dollar currency pair achieves parity later this year. Lastly, let's talk about Japan. In the earlier parts of last year, Bank of Japan's chief Kuroda racked his brain on how to bring his economy's inflation rates significantly above 0% towards his target of 2%. This was against the headwinds of stubbornly low oil prices and a persistently strong yen. However, as 2016 drew to a close, we saw improvements in oil prices on OPEC's output cut agreement and a steep plunge of the yen, which was driven primarily by Trump's victory in the US election space. These factors played a part in helping Japanese inflation to finally gain upward traction. In 2017, the key levels to watch for the dollar-yen currency pair will be 118.2 and 124. After a steep climb following Trump's elections victory, we saw the currency pair consolidating just below 118.2. It is expected that levels closer to 124 can be reached this year when the pair finally finds strength to propel beyond the 118.2 level. Similar to the case discussed earlier on the relationship between the sterling dollar pair and the FTSE 100, the dollar-yen pair and the Nikkei 225 have shared a generally positive correlation throughout most of 2016. At the time of this recording, the currency pair and the equity index share a near-perfect 30-day price correlation. On this, investors interested in the Nikkei 225 should also track the yen's relative weakness against the US dollar, as continued weakness in the yen may well be what the Nikkei 225 needs to finally rally above 20,000 this year. To conclude, 2017 is expected to be packed with uncertainties, some familiar, yet others foreign. Regardless, in the face of these uncertainties, as investors, let us all stay informed and updated to capture the potential investment opportunities which abound this year. Thank you for taking the time to sit through this market watch. I wish everyone a very happy new year. Once again, this is Tian Yong from Phillip Futures, signing off.